There are two different inventory systems that companies use. One's called the periodic system, and the other one's called the perpetual system. To analyze the differences, we're going to start off with this data up on top. So, looking at the periodic system, the first transaction we have is we will purchase 500 units worth of inventory for $15. In the periodic system, we will debit purchases for $7,500 and credit accounts payable or cash for $7,500. Later on, when we sell units, we will debit accounts receivable for $9,000 and we will credit sales for $9,000. In a perpetual system, we will start off with our purchase of debiting inventory instead of purchases for $7,500. We will then credit accounts payable for $7,500. In the perpetual system, we always use the inventory account every time we buy and sell inventory, so we keep an up-to-date record of how many units we should have at all times and how much money we should have in inventory based on this account balance. When we later sell inventory, once again we will debit accounts receivable and credit sales for $9,000, but we will also record at the same time another entry where we debit cost of goods sold for $67.50 and credit inventory for $67.50, which is the number of units sold, the $450, times the cost per unit of $15. Now, another tidbit here is that we should have 150 units left. So the 600 minus the 450 equals 150. However, when we do a physical inventory count, we count 140 units. So therefore, we have lost 10 units. This could be to spoilage, this could be to theft or damage, any number of factors. In a periodic system, we really would never know that we're missing 10 units, or oftentimes we won't know that because we don't keep inventory records up to date until we count the number of units. In a perpetual system, we always know. And in this case, we know that we're supposed to have 150 units and we only have 140. So we realize in a perpetual system that we've lost 10 units. In this case, we would need to record a debit to cost of goods sold for the cost of those 10 units, $15 a piece, and then we would credit inventory to take our inventory balance down by the 150. In a periodic system, again, we really wouldn't know that we lost 10 units, but we would still account for that loss at the year end when we record an adjusting entry and we count that we only have 140 units, that those lost 10 units will be buried in our cost of goods sold, but we really won't specifically know that we're missing 10 units. So that's definitely an advantage of using the perpetual system over the periodic system. However, with that being said, some companies still use this system. Other companies will still use this system, just depending on what best meets their needs.